Good morning. Thank you for joining today's live webinar where we go over your questions live on the stream here. We also go over certain topics. Today we're going to talk about the self-directed 401k, how to go beyond real estate for wealth building using a self-directed 401k. As always, you can follow the conversation on our community, which is mysolo401k.net/my community. It's free to join. All are welcome. So, perspective, the regulations allow for investing in various types of investments, whether traditional investments like equities, such as stocks, index funds, exchange traded funds, even bonds and CDs for that matter, to alternative investments such as real estate, promissory notes, precious metals, cryptocurrency, tax liens, private real estate syndicates as well. All those types of investments are allowed within a self-directed 401k, which can be used for wealth building by the self-employed as a self-directed 401k, also known as a solo 401k, is for the self-employed. It's important to understand that when investing a self-directed 401k, you can do transactions with certain parties while others are disqualified parties. This chart here is a good cheat sheet to help you understand the prohibited transaction regulations. So on the left here, we've got who's out, and on the right, we've got who's in. Who's out obviously means individuals or parties that the self-directed 401k cannot do investments with. Who's in? Those are parties that are allowed to invest through the self-directed 401k. So for instance, as far as who's out, you're out, which means that let's say you own a piece of property personally or even through your business that you want to sell. Let's further assume that you have a large sum of funds in your self-directed 401k since you're self-employed. Let's further assume that you want to use your self-directed 401k to purchase that property that you already personally own. Well, that would be prohibited because you as an individual own that property, or even if you owned it through your living trust or your business, you're considered a disqualified party. So it would be prohibited for your self-directed 401k to buy that property from you. Same thing vice versa. If the 401k owns a property, neither you nor your business could buy it from the 401k. What is more, you can't use a property for personal use that's owned by the 401k, nor can you use it for business purposes. So this is a good list of who's out. You also have your spouse, that's a disqualified party, your parents. As far as who's in, your brothers and sisters are in. So for example, let's say you want to buy a property using your self-directed 401k, and your brother or sister also want to invest their personal funds or even their self-directed 401k in the same property, that would be allowed because your brothers and sisters are not considered disqualified parties. This list also gives you an example of other parties who are not disqualified. Now, from a disallowed investment perspective, it's important to also know what the self-directed 401k cannot invest in. So works of art, rugs, antiques, stamps, gems, whether diamonds or other types of gems, alcoholic beverages, so you can't invest in fine whiskey, bourbon, whatever it might be, that's not allowed. Musical instruments, certain metals, certain coins, those are disallowed. Let's take a look at a couple more items here, and then we'll take a look at some of the questions here, and then we'll circle back here. So here's an example of allowed investments within a self-directed 401k, which can be used for wealth building beyond real estate through the self-directed 401k. So as I mentioned earlier, mortgages such as promissory notes that are secured by real estate, or it can be an unsecured note, car paper, commercial paper, other types of investments, as I touched on already, are these here on this list here, including foreign currency, factoring, life settlements, judgments, and so forth. We talked about disqualified persons already. We talked about some examples of prohibited transactions. Okay, let's take a look at some of the live questions here, and we'll circle back to the presentation here. Oh, here's a question from Rosemary. I have a partnership LLC. When I fill out Form 8881, Part 2, to get the $500 credit for auto enrollment, do I put 500 on line 9? What do I put on line 10? Go ahead and submit a support ticket, and we'll send you a line-by-line cheat sheet that you can use to complete that Form 8881. Let me send over our support ticket page here. And then once you submit that support ticket, we'll be able to share the guide that has screen prints that tells you exactly how to report that auto contribution credit using Form 8881 for all self-employed business entity types, whether it's a LLC, S corporation, or partnership, for example. I'm going to share that link to our support page. Okay, here's the link to our support page. Go ahead and submit your inquiry then, and we'll share that with you. Got another question here from Charlie. Suppose a non-working spouse has a pre-tax IRA, and suppose the non-working spouse had the ability to do 1099 NEC work. How much would the 1099 NEC need to be to justify opening a solo 401k and rolling over pre-tax IRA assets? Well, keep in mind that a self-directed solo 401k is used for many purposes. It's commonly used to consolidate other retirement accounts where the self-employed individual transfers IRAs and former employer plans to the self-directed 401k so that they can go beyond real estate for wealth building. And then they'll be able to invest in other alternative investments as well as equities. With respect to 1099 NEC, that's considered self-employment income. So the individual is a contractor, therefore the individual could open a solo 401k plan. He or she is not required to make distributions, or excuse me, to make contributions. If he or she does want to make a contribution, it's going to be based on their net self-employment income. So in this case, it's going to be based on their Schedule C, line 31, because when you're a contractor, you're essentially a sole proprietorship. And you can contribute as much as $70,000 for 2025 into the solo 401k based on your net self-employment income. All right. Let's go back to our presentation here, then we'll come back and go over some more questions. Let's see here. Now, the self-directed 401k is used for wealth building beyond real estate as well by using the Mega Backdoor Roth solo 401k, because you can really supercharge your self-directed 401k Roth funds indirectly by utilizing a Mega Backdoor solo 401k. And we have this great guide here on our website called the Ultimate Guide for Self-Directed 401k Plans. So some of the key features of a self-directed 401k is that you can make higher contributions than you can in IRA. With an IRA, the annual contribution limit for 2025 is $7,000, for example. Whereas for the self-directed 401k, it's $70,000. And that's a good way of getting a large chunk of money into your 401k for wealth building through the self-directed 401k. By making that voluntary after-tax 401k contribution, for instance, let's say that it's a two-participant plan, which means you have a plan where both spouses are working in the same self-employed business. Let's say the self-employed business is an LLC. You and your spouse were both working in the plan, or working under that business. You each have enough net self-employment income. Conceivably, you could each contribute $70,000 in voluntary after-tax contributions to the solo 401k for a total of $140,000 for tax year 2025. You can then turn around and convert those funds to the Roth solo 401k. So that's why here you see a total of 6 separate holding accounts, aka bank or brokerage accounts, because each spouse is required to segregate their funds under the plan. It's considered one plan, but separate holding accounts. So that would be a good way to really get some wealth building going tax-free, because once you make that voluntary after-tax contribution, the purpose of that is to then convert it to the Roth solo 401k. So now when you make those investments into, let's say, promissory notes, private syndicates, or equities, all those funds are going to grow tax-free. So that's a good way of really creating wealth, of doing wealth building, utilizing that mega backdoor Roth solo 401k. Of course, you can also do a catch-up contribution for those who are age 50 or older. So in addition to that $70,000 annual contribution, you could turn around and do another $7,500 if you're age 50 or older in 2025, and that would get contributed directly into the Roth solo 401k. So that's a way of getting more Roth 401k money into your plan. So if each spouse is age 50 or older, they'll each be able to contribute an additional $7,500 to the Roth 401k, so the Roth solo 401k, for a total of contributions $77,500 when you take into account the $70,000 normal annual contribution. You also have the super catch-up contribution for those age 60, 61, 62, or 63. So instead of contributing $7,500 in catch-up contributions, you can contribute $11,250, and that's per participant in the plan as well. So these are some examples of utilizing the self-directed 401k for wealth building. So by investing in alternative investments other than real estate, such as promissory notes, tax liens, and so forth, as well as private equity funds, as well as traditional investments, and of course by utilizing the mega backdoor portion of the solo 401k. So those are some items to keep in mind. Let's take a look at some more questions here on the live chat. Here's a question here from Shakar. An S corporation maximum amount that one can contribute to a solo 401k is gross wages. However, since the employee can at most contribute net W-2 wages, the remaining must come from employer contributions, correct? Well, contribution, so if your business is taxed as an S corporation, all contribution types, which means employee and employer contributions, are going to be based on your W-2 wages. So box 1, which is the gross wages of that W-2. So for example, let's say you report $100,000 of W-2 wages in box 1. You're going to be able to contribute 25% of 100,000 as an employer contribution, aka profit sharing contribution, which is percentage based. So 25% of 100,000 is $25,000. So that would be the employer contribution, and you would report that employer contribution on your 1120S corporate tax return. And then you can also do an employee contribution, and that one there is dollar for dollar. So if we're talking about 2022 contribution figures, you're going to be able to do another $23,500 as an employee contribution for tax year 2025. So if you add that 23,500 to that 25,000, based on the example of 100,000 of W-2 wages, box one, your total contribution is going to be what, 25,000 plus 23,500, whatever that is. I think that's what, 48,500. Let's check my math here. Oh, excuse me, 25,000 plus 23,500. That's $48,500. Let me send over a page to our S Corporation page. It's a good guide that you can take a look at further, so you can kind of do some calculations there. Let's see here. Let me see if I can find that link here. That we have. Here we go. Take a look at this page, our corporation page here. Send over that link here. But bottom line is both employee and employer contributions for an S corporation are going to be based on your gross wages. So box one of that W-2. Here's a good cheat sheet too that talks about how to report those contributions as well. Let me blow this window. Let me make this window bigger here. There's a good cheat sheet that talks about how to report those contributions on your personal tax return and business tax return. Oh, here we are right here. We'll take a look at that here. It's got some good guides too for reporting contributions, whether it's Mega Backdoor, as well as calculating contributions. It's got example illustrations as well. There's a great source for you. Okay, let's see what other questions we have here this morning. There's a question here. If you have two sole proprietorship businesses that are unrelated to each other, but run by the same person, do you need two solo 401k plans, one for each business, or can they use the same solo 401k? I have seen conflicting information about this. So bottom line is it's simply just one solo 401k plan if you're a sole proprietorship, which means you're the only owner in the business, and contributions to that solo 401k plan are going to be based on your aggregate self-employment income from both sole proprietorships. So you're not going to be able to double up on contributions, for example. So you're not going to be able to contribute $70,000 just per self-employed business. That's not the way it works. You got to aggregate all your self-employment activity. Here's a good page from our website that talks about that, about aggregating. So no, it would just be one plan. The plan documents, specifically the adoption agreement, has a section that is a catch-all that essentially says that all the self-employed businesses are participating in that one plan. So one plan, aggregate contributions between both self-employed businesses, not to exceed the overall contribution limit, which is $70,000. for tax year 2025, for example. And it's also a big IRS red flag to have multiple solo 401k plans. Why? Because the government is concerned with individuals not understanding the rules. They think that they can double up on contributions. They can double up on solo 401k participant loans. They can also skirt having to report the market value of that solo 401k on Form 5500 Easy once the market value of the plan is greater than $250,000. So that all that gets aggregated between all of your self-employed businesses and considered just one plan. Let me share this page from our website here on the live chat so you can take a look at it further. Okay, let's see if we have any other questions here this morning. Again, we'll be back here again at 1 p.m. Pacific time. We're on twice a day, once here at 10 a.m. Pacific time and a second time at 1 p.m. Pacific time. Today's webinar was focused on self-directed 401k beyond real estate for wealth building. We talked about some of those topics from investments to using the mega backdoor, for instance. Okay, let's see here. Looks like we got a question here. Can the employer still make an employer contribution if after deduction they are breaking even at the end of the year from accumulated cash in the business balance sheet? So it's really much simpler than that. The contributions are going to have to be based on your W-2 wages, both employee and employer. So back to my example earlier, if you're S corporation, you report 100,000 in W-2 wages, the maximum employer contribution of that 100,000 is going to be $25,000 as an employer contribution. The employee contribution is going to be 23,500 for tax year 2025. So both employee and employer contributions are going to be based on that 100,000 of W-2 wages that you pay yourself. All right. So got a question here. Do you provide tax filing assistance to your clients? So yes, we do the tax filing for self-directed 401ks. So we'll prepare the Form 1099-R. We'll file that with the government. We'll also prepare the Form 5500 Easy, and we'll file that with the government. We do those returns for clients who timely request those tax returns because we don't have access to our clients' funds. So as long as the client communicates that they want those done, we'll gladly prepare those for our clients at no additional fee. That's all covered in our annual fee. All right. I have a solo 401k at Schwab through my solo 401k. When should I expect tax documents for the mega backdoor? Those have already all been sent out. If we're talking about tax year 2024, check your spam folder because they were sent from our email address of, let me pull that up here. We sent a download link from the email address that the download link came from is 1099R at mysolo401k.net. So 1099R at mysolo401k.net. So take a look at that. If you still have questions on that, go ahead and submit a support ticket and we'll take a look at it right away, but they've all been sent out already for tax year 2024. Okay, let's see here. What other questions we might have here? So it looks like Charlie's got a question. Continuing on my question, would 5,000 of 1099 profit be enough to justify? Well, I mean, if you're trying to transfer an IRA to the solo 401k, then it's a good way to consolidate retirement accounts. Whether $5,000 is enough, that's really between you and your CPA. I mean, a solo 401k is used to save for retirement. You're not required to contribute to it every year. So in some years, you might have more self-employment income than others. So that's really something you got to figure out on your own with your financial advisor, whether or not you should open a solo 401k. Of course, from an eligibility perspective, you have to be self-employed. All right, let's see here. I got another question here from Gregory. Hello, I realized late in the game that I want to make after-tax contributions to my solo 401k. I'm trying to set up a solo 401k to make after-tax contributions for the tax year 2024, but the details provide me to establish the plan as 1/1/2025 establishment date. Am I able to make 2024 contributions? Yes, you are. So if you open a solo 401k plan here in 2025, and let's say that your self-employed business is a sole proprietorship, partnership, or a corporation for that matter, you're going to have until your business tax return due date plus timely filed extension to open a solo 401k plan here in 2025. So it would be effective for tax year 2025, but you're going to be able to make contributions for tax year 2024 by your business tax return due date plus timely filed extension, specifically if we're talking about voluntary after-tax solo 401k contributions. Let me share a really good page from our website that sheds more light on that. Let's see here. Here's a good page here. The year 2024 self-directed solo 401k setup establishment deadline. So this is a good resource here. Let me share this page with you here. So in your particular case, if you just opened the solo 401k plan here in 2025, today's March 4th, 2025, let's say you opened it today or you opened it sometime this year, then the plan is effective for tax year 2025, but you're going to be able to make contributions for tax year 2024, specifically voluntary after-tax contributions, because the regulations allow you to make contributions to both open the solo 401k plan for 2024 here in 2025 and make contributions for tax year 2024. Well, take a look at this here. So you could do a voluntary after-tax contribution of $69,000 for tax year 2024, and then you can do it here in 2025 by your business tax return due date plus timely file extension if you open a solo 401k now. And then you'll be able to convert those funds after you make them to the voluntary after-tax bucket over to the Roth solo 401k or the Roth IRA. Well, here's that page. It's a really good resource here. Let's just take a look at let's look at the S corporation for now. Okay, so here's the page pertaining to the S corporation. And here's a good chart that we have here. So the setup line, so there's one setup deadline of December 31st, 2024. That means you can make all types of solo 401k contributions for tax year 2024. And you're going to have until March 17 or September 15 of 2025 if you file for an extension. Now, again, looking at the setup deadline, we got a March 17, 2025 setup deadline here, which means that if someone opens a solo 401k and they're an S corporation and they open that up by March 17 of 2025, they're going to be able to make employer pre-tax and employer Roth contributions as well as voluntary after-tax contributions. And they're going to be able to do that by March 17, 2025, or if they file for an extension, by September 15 of 2025 if they file a timely extension. Let's look at the September 15th of 2025. If you open a self-directed solo 401k here in 2025 by September 15th of 2025, which is the timely extension due date for your business tax return, then you can make both employer pre-tax contributions as well as employer Roth contributions, as well as voluntary after-tax solo 401k contributions. You're going to see that the only type of contribution you cannot make if you wait to open it up in September 15 are going to be employee pre-tax contributions and employee Roth contributions. So again, we have a separate page dedicated to each entity type. Let's go back to the, so that was S corporation. Let's look at a sole proprietorship, just so we see the difference between the sole proprietorship and the S corp. Give me a moment here. Okay, here's an illustration of a sole proprietorship. You're going to see it's a little bit different. So again, if you're looking to open a self-directed 401k, aka solo 401k plan in tax year 2025, so that you can still make contributions for tax year 2024, you still have plenty of time. We just did an illustration for an S corporation. Here's an example for a sole proprietorship. So the setup deadline of December 31st, 2024, that would allow you to make all contribution types for tax year 2024. So that's employee pre-tax, employee Roth, employer pre-tax, employer Roth, and voluntary after-tax contributions. And you can do that by April 15 or October 15 of 2025. So you can do those contributions for 2024. Here's an example. Looks like this needs to read April 15 of 2025. So April 15 of 2025, if you open a solo 401k plan by April 15 of 2025, you're going to be able to do all contribution types for tax year 2024. And you can do that by April 15. You'll be able to do employee pre-tax as well as employee Roth, employer pre-tax as well as employer Roth, as well as voluntary after-tax solo 401k contributions before the mega backdoor. Now, if you wait till October 15 of 2025 to open up the solo 401k and you're trying to do contributions for tax year 2024, then that means that you're going to be able to, so if you open that solo 401k plan in 2025 by October 15 of 2025, you're going to be able to make 2024 contributions. However, you're not going to be able to make employee Roth or employee pre-tax, but you are going to be able to make employer pre-tax, employer Roth, as well as voluntary after-tax solo 401k contributions as part of the mega backdoor. And you'll be able to do that contribution by October 15 of 2025. So this is a good chart that we have on our website. Okay, let's see if we have any more questions here. Give me one moment here. There's a question here. Is there a pathway to roll over employer contributions to a Roth IRA in the future? I heard there was a 2-year window specific for employer contributions, but not sure. So just like certain triggering events apply when making a distribution from a solo 401k plan, such as BNH 59.5 or no longer self-employed, you also have triggering events for contributions that you make to the plan that you later want to transfer to a Roth IRA or even a traditional IRA. So in your situation, if you make an employer Roth solo 401k contribution, that's going to fall under the employer rules. So you got to meet certain triggering events. So in order to transfer an employer Roth solo 401k contribution to a Roth IRA, you have to either have had the solo 401k plan open for 5 years, or you have employer contributions in that profits in that solo 401k that have been in that plan for at least 2 years. So that's the 5-year rule and the 2-year rule. And that's specific to employer Roth solo 401k contributions as well as employee Roth solo 401k contribution. However, the rules are different. If you make a voluntary after-tax solo 401k contribution, those can be converted to the Roth solo 401k or to the Roth IRA. You don't have to wait a certain amount of time before you can convert it over directly to the Roth IRA. So many of our clients will either transfer that voluntary after-tax solo 401k contribution over to the Roth IRA or to the Roth solo 401k. That's dubbed the mega backdoor Roth strategy. Okay, let's see what else we have here. Yeah, let me share the link to the page I was referring to earlier about the deadlines to open a solo 401k for tax year 2024, because you still have plenty of time to open a plan here in 2025 so that you can make contributions for tax year 2024. There's that page link there. Okay, let's see here. Okay, looks like those are all our questions for today. We really appreciate you joining this morning's webinar where we discussed the self-directed 401k, going beyond real estate for wealth building. We'll be live again today at 1 p.m. Pacific time. Please like our YouTube channel and subscribe because, again, we go live daily, twice a day until 1 p.m. Later today. Have a good rest of the morning, and we'll be back on again at 1 p.m. Pacific time today.